This is Basic Risk Management course. In this course, students will be able to understand more about cyber risks and their basic mitigation strategies.
We will delve into the fundamentals of risk management. By understanding the principles and techniques involved, you will be equipped to identify, assess, and mitigate risks effectively. Get ready to enhance your risk management skills and protect your organization from potential threats. Let's begin. Effective risk management is essential for organizations as it allows them to proactively address potential threats and vulnerabilities. By identifying and managing risks, organizations can minimize their impact on various aspects, including operations, finances, and reputation. Risk management also fosters business resilience, enabling organizations to navigate uncertainties and ensure continuity. Ultimately, risk management is a strategic approach that safeguards and enhances organizational performance. Basic risk management involves several key steps. It starts with understanding risks and their potential implications. Organizations need to identify potential threats and vulnerabilities that could pose risks to their operations. Once identified, the next step is to assess the likelihood and impact of these risks. This assessment helps organizations determine the severity of each risk. Based on the assessment, appropriate strategies and measures can be implemented to mitigate or control the risks. Regular monitoring and review of risk management processes are crucial to ensure ongoing effectiveness and adaptation. To effectively manage risks, organizations need to determine their critical business assets and resources. These assets can include physical assets such as equipment and facilities, as well as intangible assets like intellectual property and data. Human assets, such as employees and expertise, are also important considerations. Additionally, financial assets, including capital and investments, play a role in risk management. Identifying and recognizing these assets is vital for understanding potential vulnerabilities and designing appropriate risk mitigation strategies. Once assets are identified, it is crucial to evaluate their importance and worth. This evaluation involves assessing the potential impact of asset loss or damage on the organization. Considerations include the value of assets in terms of revenue generation or market share. It is also essential to include the cost of asset replacement or recovery. Additionally, the value of reputation and brand image should be recognized as it can be significantly impacted by asset loss or damage. To effectively manage risks, organizations should document the potential consequences of asset loss or damage. This documentation should outline the financial impact on the organization, including direct costs and potential loss of revenue. It should also identify the impact on operations and productivity, as well as the effect on customer satisfaction and trust. Furthermore, potential legal and regulatory consequences should be documented to ensure compliance and mitigate legal risks. Assessing the likelihood of loss or harm is an important aspect of risk management. This assessment involves analyzing historical data and trends to identify patterns and potential risks. External factors, such as market conditions and changes in the industry, should be considered. Internal factors, including vulnerabilities in processes or systems, should also be assessed. Expert judgment and industry benchmarks can provide valuable insights. Assigning likelihood ratings based on probability assessments helps prioritize risks and allocate appropriate resources for mitigation. To effectively manage risks, organizations need to evaluate risks based on their likelihood and impact. High-risk assets or vulnerabilities should be prioritized for mitigation. This prioritization ensures that resources are allocated based on the severity of each risk. Mitigation measures and strategies can then be implemented accordingly. It is important to continuously reassess and update mitigation priorities as risks evolve or new risks emerge, ensuring ongoing effectiveness in risk reduction. In conclusion, risk management plays a crucial role in ensuring business resilience and protecting organizations from potential threats. The foundation of risk management lies in identifying and valuing assets, which are critical to the organization's operations and success. Documenting the impacts and likelihood of risks provides valuable information for decision-making. Prioritizing mitigation activities ensures that resources are effectively utilized to reduce risks. Regular review and adaptation of risk management processes are essential to maintain an effective and proactive approach.